Hello everyone. Thank you for joining today's webinar. Currently, we are seeing an amazing amount of interest, innovation, and growth in open banking and account aggregator ecosystem in India and the world. Today's webinar, we will focus on evolution of AI ecosystem, various use cases, and how you can be part of it. Let me introduce today's panel to you. We have Vamsi Madhav from Sahamati. Vamsi heads products and standards for Sahamati. Angaj Bhandari is Managing Director for Fime India and South Asia. And I look after business development activities for Fime India. And we have Amit Kumar Yadav, who's a solution architect for us. At the end of the webinar, we will have a Q&A session. We will use Slido for that. It's pretty simple to use. Just go to slido.com, enter the code API, and enter your question. Or you can simply scan the QR code displayed here. Your questions will be displayed to all, and we will try and answer all the questions. If due to time we are unable to answer some of these questions, we will publish them on FIM's website. And while leaving the webinar, there'll be a short survey. Please take time out to answer that. And this webinar will be recorded and published on FIM website. Let's quickly look at the agenda. We'll first talk about open banking and account aggregator initiatives globally. How has the AI ecosystem evolved in India? How is FIM and Sahamati contributing to the ecosystem? Various use cases and benefits of AI ecosystem. And we will end with the Q&A session. Angaj, can you introduce FIM to the audience, please?
Sure, Hardik, thanks. And I would like to welcome everyone. Thanks for taking out time. So FIM, as you can see, we are globally spread. Basically, we have direct presence in 9 locations, and through our partners, we are in about 18 locations. All these are our key markets. We have 3,000 plus customers across the globe. About 450 plus employees, FIM expert, 3 development center, one in France, one in Bangalore, and one in Taipei, and basically 40 plus accreditations globally. So coming to our offering, essentially we operate in 3 major areas: payment, which has been our core area, smart mobility, and the latest is the open banking. Now, in all these 3 areas, we have a team of business consultant, we have the team of technical advisors, testing experts, and we have our test platforms, which are mainly cloud-based test platform. Our philosophy is that in all 3 areas, we work very closely with our customers. We engage with them at a starting stage to understand their goal, understand their problem. So basically to define their business aim and the goals or the problem. We from here we go on to help them design their solution, deploy it for them, and finally we test and make them achieve their compliance.
Thanks, Angaj. Vamsi, can you introduce Sahamati to the audience, please?
Sure, I will. Thanks, Hardik, and thanks to everyone who's there. You're invisible to us, but in these days and times, this is the best one can do. So thank you for making the time. Sahamati is a non-profit alliance for the account aggregator ecosystem. We were born a couple of years ago out of the need for a collective effort to ensure that the AA ecosystem is live and throbbing and buzzing. We are a not-for-profit, and the key goals for Sahamati are essentially to drive adoption through a bunch of educational services that we offer, participation in workshops and forums like this one, for example. Second, we bring together all the players in the ecosystem, and it's a very heterogeneous set of players because the scope and vision of this ecosystem is such that it impacts financial service providers across sectors, right from banking to insurance to securities and pension funds. So the idea is to bring together a very harmonious playground and orchestrate codes of conduct, orchestrate uh, behaviors that guarantee technical quality. And lastly, and perhaps most importantly, the idea is to really make this meaningful for citizens. So we work closely with everyone to find use cases to embed, account aggregation, which is the Indian equivalent of open banking that's globally, like Hardik and Angad said, to embed that into financial journeys so that data democratization can truly happen at scale in this country. So, uh, one of the very interesting parallel stories to us is that, unlike several initiatives that are almost entirely driven by purely regulatory bodies and statutory authorities, uh, what's happening with Account Aggregator is a very interesting mix of standards bodies, which are regulatory, but also market collectives, which are essentially driven off of the market. So one good parallel to think of is what happens in Wi-Fi, and there are close to 800,000 different market participants, and there is IEEE, which is a standards body, but then there is Wi-Fi Alliance in the middle, whose job is to bring all of it together and ensure that there is adoption, innovation, and harmony in how the industry adopts the standard. So similarly, Sahamati works very closely with Revit, which is RBI's body for all technical standards in this ecosystem. But we also work very closely with market participants. We have formed out of a collective of market participants to ensure that the administration and adoption of this happens in a very fruitful manner. So the classes of services that we kind of typically look at ourselves as providing as a nonprofit fall under these categories. Over the last couple of years, we've conducted, many innumerable workshops. We conducted a hackathon last year. We had phenomenal participation in terms of several startups and established companies showing what could happen in the future when this is really available at scale. We have since then also put together certain norms, in close collaboration and consensus to ensure governance of the ecosystem. When we say governance, what are, for example, the techno-legal frameworks that bind everybody? What should be the model of reciprocity to ensure that participation is fair, because it's a very heterogeneous set, and these are not easy problems to solve. So efforts are on in many of these still, but that's the role, is to put together a governance mechanism that complements the regulatory mechanism that exists. We offer some common digital goods, which are clubbed under technical services, because these are precisely that. They are commonly required. They are critical functions, but they are not really core to any of the participants' products. So a registry, for example, that enables interoperability and discoverability, or a common token service that enables secure API communication with a standard set of claims, and so on and so forth. So as we go forward, there will be several technical standards that will also emerge out of the market. Some of them have already emerged, which complement the regulatory standards. These standards are around, for example, user journey embedding, or around SLAs that the market has to promise. So Sahamati plays a role in bringing together these technical conversations and, wherever required, actually crowdsource and build through community efforts these common goods, and in some cases, like in the registry, even invest in hosting it and managing the operations of it, right? So that's what we do under the technical. And last, obviously not the least and the most important topic for today, is providing certification services. Now, we'll speak a little bit more, obviously, in detail, but the importance of certification we've seen in the last couple of years is simply this, that while there is a standard, there are interpretation issues, there are interoperability issues, and therefore just an assertion that a standard is there has been found to be necessary but insufficient in guaranteeing that truly ecosystems like these, which are purely digital in nature, are working extremely smoothly. And I think the certification framework, and this is again an idea which is there across digital ecosystems, whether it's Wi-Fi, Bluetooth, even payments. And so similarly in this ecosystem, whether globally in open banking or in India, we believe there are several topics where standards will emerge, whether from regulations like in the case of API and data, or from the market, like in the case of onboarding standards for customers, or branding standards, data governance standards, and so on. And as and when these standards emerge as standards, we need a certification framework for technical guarantees. And so we basically own the framework, we build it based on feedback, and then Fime and parties like Fime are empaneled as certifiers to help execute this framework and as experts come in and build that further. So that's essentially what we do.
Thanks, Vamsi. Angaj, can you please tell us about the challenges and the learnings from open banking and account aggregator initiatives globally?
Sure. And thanks, Vamsi, for setting up the overall context. So, see, as you can see that worldwide, the adoption of open banking has been good. I mean, basically, the initiative started in 2013 in Europe through basically the European Payment Association, and then it was again taken up in UK, and then we see a good adoption worldwide. Uh, mainly across the globe, I mean, it is backed by a regulator, either backed or driven by a regulator, and which is essential, and which is what has been trend globally. Now, I mean, the fundamental question is the need of open banking. Why do we need open banking? I would say it's late to answer, but I just want to put on this context that there has been a debate, and that was maybe the fundamental reason that why open banking evolved, that who owns the customer data, and now that still remains let's say a debatable topic. But my point is that whether we say okay, customer owns the data, or the data is owned by a repository or wherever the data resides, finally, if there is a mechanism, if there is a better way to provide improved customer experience, or the competition, or the scope of innovation, then why not? So the point is that and what are we saying? That open banking is basically sharing the customer data to trusted parties, and mainly for the better innovation, for the better financial product. So my point of view is that definitely this is needed, and I think we see a good trend globally. Of course, in India, one wave started in 2016 with UPI launch, which was mainly launched for the interbank transactions. But now we see that on UPI platform, you have more and more use cases getting created. So use case is established, the need is clearly established. And that's where I'm trying to just touch upon the fundamentals here. That what is the need, what is the growth, and what are the drivers. In terms of growth, I see globally and in India as well, there's an immense amount of potential for fintechs, and we are seeing this. I mean, I've been in part of payments industry for a long time, but ever since I've entered in this space, the kind of organizations I'm dealing with, I can say that I've never dealt with them in the past. That itself says that me being experienced in the payments and financial services domain, I'm seeing loads of organizations which are coming and offering the innovative products here. So definitely, I mean the non-traditional financial entities, neobanks, etc. There is emergence of these entities, and there is a growth opportunities for fintechs. For regulated financial entities, and I mean I'm just taking the when I say this regulated financial entities, I'm trying to say that the banks, the insurance companies, or the mutual fund houses, the large traditional financial entities, for them, I would say that there is, of course, a scope to basically collaborate with these fintechs as their extended arm. The fintechs have been agile, offering innovative products, and the best way is to ride on this open banking bandwagon, tie up with them, and launch innovative financial product. Finally, the revenue and uh, there are various reports on this and various figures, and the funny part is that each report in terms of figures differ from each other. But what I can say that what is the consensus, or what is the common data, that the digital payment market, I mean, is expected to grow at a CAGR of about 19%. The market is expected to reach about 250 billion USD by 2018. That's overall digital payment market. Again, on the one of the Accenture reports says that approximately 400 billion dollar is up for stake because of the growth of open banking. So, and then there are, of course, various reports. One can Google it and find out. But yeah, clearly the underlying statement is there is a potential to make money and to grow in this stream. And then coming to drivers, I think unanimously we all can agree that regulators and industry alliances have been the major force here to drive. They understand the need for it. They understand. They see a sense in it. So that's where I think it's been driven, and which is where the scenario with Sahamati we are seeing it's basically backed by RBI, and we are seeing a good uptake in the Sahamati ecosystem in India. Consumer appetite, again, it's an interesting point, and we can see that wherever financial technology or financial services market have grown, this also depends on the consumer appetite. And I would take the example of India, which has been quite savvy on the innovation on the financial product. I mean, we all know the growth of UPI. It's one of the largest real-time payment or API-based payment in the world, we can say. I would like to put across 2 points here that which has been the major use cases we've seen, like on the personal finance management or lending, has been the most promising use cases for open banking. And maybe when we move forward, Vamsi will talk more about it. But yeah, that's definitely a key driver. And lastly, I would say partnership, which is understood that there has to be agile partnership between traditional financial organization entities and the fintechs to make this ecosystem grow. For me, it definitely creates a win-win situation. Now, what we've seen globally, and I would like to narrate some of the challenges which we have seen globally across the open banking ecosystem. Harmonization. So I would say, what do we, the overall open banking ecosystem. So it's like basically, I am talking in French, you are talking in Hindi. The communication doesn't make sense. We need to have the standard set of data exchanges, which means the API data exchanges have to be common across the ecosystem. You need to have, and that's where the emphasis on the certification body to create a compliance program, which is standard all across, irrespective of the product you are developing or basically the platform you are using. What this also ensures that there is good level playing field for the new entrant in the ecosystem. So it overall benefits everybody in the ecosystem, not just basis the muscle, but it gives a basically harmony to overall ecosystem. Consumer trust. This has been again has been a common point across all open banking ecosystem. It's the fundamental of open banking ecosystem, I would say. What is happening here, and same scenario we are seeing in Sahamati also, that finally we are looking at consent-based data sharing and the authentication by customer. Now, any customer would trust a third party, we're talking about the data going to third party. It has to be trusted, and that has to be ensured across the ecosystem. So that is of prime importance in the open banking ecosystem. Standardization and test, and as FIM has been working in this space for last 30 years, so we can say that this helps the overall industry to grow, to make it compliant, give a legal framework, give a level playing field to all the participants. And there is a scope of more adoption, more innovation. So these are the key challenges which we've seen globally, and I think this is what would be challenges in India. What I can clearly see that with Sahamati's initiative, these points are really these challenges are really well addressed, and we are happy to support this journey through our expertise globally as well as in India.
Thanks, Angaj. Very informative. Can you tell us how is FIM helping the ecosystem?
Sure. So as you can see, I mean, FIM, we started our journey in open banking in 2017, and I'll explain that we have worked in very diverse kind of areas here. So our headquarter being in Europe, our journey started in Europe. First with STET, which is basically a major payment processor across SEPA, which is Single European Payment Area. And when the PSD2 came, STET also basically implemented PSD2. So we started our journey with API standardization and the API test plan and the test framework for STET. And then the Berlin Group, which is again a technical standard body across Europe. They have member banks. They are basically facilitating the open interbanking transaction. And again, FIM worked with Berlin Group to on the API specification, test plan, and creating the test framework. So I can say that these initiatives are similar to what we are doing for Sahamati. Then we moved on to compliance test tool. So here our journey was standardization, giving a framework, creating a test specification, test plan, etc. And then we developed a test tool, which is our tool called Trust API Plus. So Arkia is one example who is participating, is basically a credit mutual bank, and they have customers across Europe, and they took the platform services from us on Trust API to comply to basically PSD2 standard and fast track their onboarding on Trust API. I mean on the PSD2 compliant framework. Moving on to, I mean, of course, in FIM also in 2020, we've moved our platform, I mean, testing tool on cloud. So we are now offering this platform on cloud-based, which of course makes it easier for everyone to access and fast track their compliance. So Laza again is a major investment banking and finance organization in Europe. FIM in fact helped them through Bridge. Bridge is a mobile app platform. So we help Laza to test their API implementation in a live environment through Bridge, which is a mobile app, and Bankin, which is the account aggregator proxy. So again, they took basically the services, compliance testing services from FIM. OZIA, interestingly, OZIA is another use case. So OZIA is basically a collective of API in the identity management. So this is not in the payment sector, it is in the identity management. Their aim is that they want to create a universal interoperable identity management ecosystem across the world. So they basically work with governments, they work with the identity solution organization. And the aim, as I said, is to create an interoperable the identity management ecosystem, irrespective of the architecture, solution, or technology you're using. So FIM helped OZIA starting from test and certification framework to test plan to test tool for OZIA and their participants. So yeah, that's a unique position compared to payments world. And then finally, now we are We have fully digitalized our services. So you can see in 2021, we are working with Sahamati, and these are the 3 standards, which is what we are working with, creating the test framework for them and helping their participants to comply with their standards.
Thanks,
So
Ankush.
yeah, thanks.
Vamsi, can you tell us how's the AI ecosystem evolved in India?
Sure, absolutely. And it was quite fascinating. It's always very interesting to compare, open banking initiatives across the globe, much to learn. But interestingly, I think much to offer also, because as we speak, even as we get the Indian ecosystem live and buzzing, there's a parallel initiative at engaging with other countries, to discuss the core architecture. And the core architecture is what's shown here, which is essentially everybody here in the audience probably is acutely familiar with India Stack, and we've seen the benefits of the layers, starting with Aadhaar, as a foundational layer for identity, then moving on to e-sign and DigiLocker as a layer for becoming paperless, and then UPI, which Angad spoke about. What's now getting bolted on top is essentially what's called the DEPA layer, or data empowerment and protection architecture layer. In simple words, the consent layer. And what this does is basically bring the consumer's rights over his or her data at the center of a digital economy that increasingly is dependent on consumers' data being used by themselves as an asset. And today, while we have all of the other layers in helping us gain services and make payments, data is still locked in various silos. So there are millions of bank accounts and millions of insurance accounts and millions of pension fund accounts where there is a treasure trove of data. The consumer's ability to get tailored financial services depends on that data being shared, but there isn't any, or there wasn't any before the AI ecosystem was conceived of several years ago. There wasn't any UPI-like mechanism to actually make data move seamlessly, right? And so that's basically what the key goal is in terms of the consent layer. So if you double click on this layer and look at what is really happening, there are essentially 4 parties. There is the consumer herself, who's at the center of it. There is the consent manager, or what is also called the AA, or the account aggregator, which acts as an agent of the consumer, of the citizen. An agent for what? An agent for facilitating transmitting of the consumer's consent across financial institutions, and then on the basis of that consent, acting as a plumbing layer to facilitate data transfer. Now, where is this transfer happening? It is happening between the other 2 parties, which is essentially on the left-hand side, you see banks and mutual fund houses and insurance companies and GSTN and all of these entities that manage accounts on financial information providers. They have the information and they provide it when the consumer consents for that information to be shared. And on the other side, you have financial information users, which could again be obviously the same types of institutions, banks and mutual funds and insurance, etc. But if you look at it from their perspective of what they're using it for, it is a bunch of use cases. So departments within these institutions that serve institutions, serve individuals, that do lending, that do personal finance management, these departments end up becoming the financial information users. So the AI architecture is all about fundamentally consent, and the standards start with something called an electronic consent artifact, which has been standardized, right, and codified in the tech spec. This was originated in an initiative by the Ministry of Electronics and IT, and that's been adopted now by RBI and REBIT and codified into a standard, right? And we do see that once the Personal Data Protection Bill, becomes a reality, then the concept of consent and consent artifact will also become a standard across other sectors, right? But that's for a separate discussion. The second part of standards is the APIs that FIPs and FIUs and AAs have to expose to each other for the French Hindi situation to be avoided, right? So everybody speaks the same language. And the third aspect of this is what you see as the central registry, which is a box below, which essentially provides public information for all of these entities to, like the internet, you just discover, a certain URL and you hit the URL and you end up getting connected to that. So public information of IPs, endpoints, and public keys are necessary for this API communication to work as smoothly as internet communication, and that's what the registry provides. So this, in a nutshell, is essentially the architecture of the overall flow. Now, a question that we're often asked is, all of this is fine and all of this is essentially what the regulators have taken care of for us, right? So what is the need for additional bodies like Sahamati, and what is really the need that is causing, frameworks that complement the standards, such as certification frameworks and market standards for additional technical issues, such as how do you embed, AA journeys into financial information users' websites or their apps. So there are a whole host of technical problems that are over and above just APIs and just the electronic consent artifact. While that is key and central and necessary, it is not in itself sufficient to guarantee that interoperability will happen smoothly. And a classic example of this is what happened in the payments industry, with all the major card brands realizing in the early years, early 2000s, that each of them had what they called a standard, very similar but not the same, and therefore when they ended up building a common ecosystem of merchants and issuers and processors, etc., that there were several interoperability issues, right? And thus was born the PCI SSC, which was actually an industry body. It had nothing to do with regulators. It was created out of the same participants who suffered the problems of interoperability. And they said, well, let's get together and let us agree on what is it we should do, so that while there is a broad framework that all of us are following, there are still issues that we need to crack. And today we know that PCI DSS has become a standard that's even blessed by regulators. It's demanded by both market and regulators, and it's become central to the boom that we've seen in electronic payments, right? Likewise, what we believe will happen is what happened with Sahamati. So essentially, in the early years, Hardik, if you can go to the next slide. The early years, when in 2016 to 19, the master directions came out from RBI. The first set of licenses were issued in around 2018 and 19, operational licenses and principal licenses, right? And then the first set of tests and POCs and, UAT tests started happening around that time, in second half of 2019. And it's around that time that a similar situation was hit, that there were interop issues, encountered during implementation, interpretation issues, and a lot of precious time and bandwidth has actually gone in trying to resolve, this amongst such parties, even though it was a very limited set of parties, right? So when Sahamati was born in around mid-2019, one of the immediate problems that had to be solved by the industry, for the industry, was to put together a framework that would essentially bind everybody. And it's a very simple framework. It's a test suite, right? And so Sahamati was born out of a need to resolve such kinds of issues. And what therefore has happened since then, particularly in the realm of certification, is that a framework was created, much like PCI DSS standard. Certifiers were sought out and empaneled. And as we speak now that the ecosystem has gone live in managed rollout, and we do see this now becoming a reality, we only expect, the whole ecosystem of interested parties to grow. But we also expect certification to become simpler, to become, more meaningful and less frictionful. And the role of certifiers is also to contribute to the simplification of all of that. And through a combination of depth and simplification, we expect this framework to become as robust as PCI DSS has become, as an example, and therefore also be looked upon by regulators and by statutory authorities as a good thing for the industry, right? So much like PCI, which did not start as a regulatory compliance-driven mandate, the Sahamati certification framework has evolved as a market practice, and it has nothing to do with a regulatory or a compliance or a mandate that is imposed on anybody, right? But it is a mandate imposed by the market and all of the initial players. We've got all the leading banks today certified. We've got several leading NBFCs certified, and we've got all the A's certified. And I think that process of the community designing and defining a standard for itself makes it a mandate and makes it meaningful. Even as we continue to evolve. By no means is this at a stage where we can smoke a cigar and say this has reached the best possible state it can be. But that's how ecosystems evolve, right? So that's where we are on this framework.
Thanks, Vamsi, for walking us through the evolution journey in India. Amit, can you walk us through the certification process, please?
Yeah, sure. Thanks, Vamsi. Vamsi has provided all the brief of the ecosystem and the functions, and thank you everyone for being the part of this webinar. So I will just take you through the product which we are using for the certification body setup and the approach which we had followed to certify the ecosystem. So the product which we had used is the Trust API as the name, and that is a cloud-based platform and which is utilized for the API automated testing. And as it's a cloud-based platform, so it inherits all the cloud-related the benefits like it's scalable, accessible, and easy to upgrade the new releases as well. Okay, so the approach what we had followed, like we can see here the three ecosystems we have, the account aggregator, FIP, and FIU. So essentially, whenever any ecosystem we need to test, then remaining two systems we will keep into the simulation mode, and that simulation will be taken care by the Trust API. So let's understand from the example itself. So here if you'll see, if we wanted to test and certify the FIP solution, then the FIP solution will become as the SUT, the system under test, and the remaining two entity, the account aggregator and the FIU, would be in the simulation mode, and which will be taken care by the Trust API itself. Okay, so Hardik, yeah. So in the similar way, if you wanted to, can you go back? Yeah. So in the similar way, if you wanted to test the FIU solution, so it will become the SUT, and with the and FIP and account aggregator would be in the simulation mode, which will be the taken care by the API Trust API plus product of the Fime. So this is the approach, and now the process. The process is here quite simple. If you'll see here, we have a 4 stages, start from the order till the issuance of the certification. So whichever entity, as we know, the entity is the FIU, FIP, and account aggregator. And as a prerequisite, they need to register themselves with the central registry, which Vamsi has already spoken about, the benefits and the features, and then the onboard to themselves to the Fime platform. So as soon you will onboard on the Fime platform, you will get the Fime will enable the access of the Trust API for the testing of the solutions. So this is the order stage, and after that you would have the access to the particular test platform, and then you are ready to launch their ready to test your solutions using the Trust API. So in this stage, you can test and debug your solution as soon as all the verdicts of your test cases will be passed. then you need to inform and submit the logs to the Fime for validation, and Fime will validate, and after that they will provide the go ahead for the compliance. So in the compliance stage, you need to re-execute all the test cases, and again you need to submit the logs for the issuance of the certificate. So for that compliance, for that, what you the Fime will validate along with the Sahamati, and will provide the co-branded certificate for the entity. So that is the overall process.
Thanks, Amit.
Thanks.
Vamsi, can you tell us few use cases and benefits of joining the ecosystem?
Sure. I think the first and most interesting thing that the ecosystem has done is it has more than 23 different types of data that are envisioned as part of the scope, which is itself very unique as compared to what other open banking regimes have done. But obviously, there will be a sequence in which this is made available. Today, what we are seeing fundamentally is that the first set of data types that the FIPs are sharing and which the FIUs are consuming is fundamentally CASA data, current and savings accounts, and term deposits and recurring deposits data. So there is a mapping in terms of the data types available and what use cases that we are typically seeing. With CASA, TD, and RD, and broadly all use cases can be clubbed into two categories. There's a lending category and then there's the PFM category, right? Broadly, the personal finance management category. So in lending, the obvious low-hanging fruit, which is where everyone has started, is essentially to automate the data ingestion and the data collection process as part of their omni-channel, omni-product loan origination systems, right? And this therefore becomes agnostic to what kind of loan. Wherever you need a CASA statement for whatever time period that you need it for, account aggregation becomes a far superior way than what is available today. And many in the audience, would be seized of that matter much more than any of us here. So account aggregation offers a great, leg up from that perspective. Loan monitoring, which is another very interesting subject, is also benefiting. We are, while most of the lenders have begun with loan origination systems, there are both TSPs and there are also discussions with departments that do monitoring to figure out how this could become as seamless as how getting a credit score today is, right? An early warning system dashboard can perhaps be now conceived of with account aggregation feeding in data and loan monitoring being far less intensive as compared to what it is today. And finally, in terms of PFM, just with transaction data being available, a lot of data-driven PFM features for customer engagement is what we are seeing as the first set of use cases. Now, phase two, in a few months, we will have GSTN, and we hope that the FIPs who've all shared CASA, TD, and RD will graduate to starting to share credit card, right? And obviously, this ecosystem will grow with more usage and a virtuous cycle will start. We're seeing the beginning of that. So therefore, that hope is not unfounded. When that happens, cash flow lending is an extremely powerful use case geared towards SMEs that will really be extremely attractive to lenders. Low ticket, unsecured invoice financing happening with very low risk and low cost is really a dream. And that's what ecosystems like AA and use case ecosystems like OCEN, which is Open Credit Enabled Network, which necessarily involve AA as part of the whole architecture, will bring to the market. On the PFM side, with more data, obviously the ability to drive insights will become better. And lastly, when you have insurance, pension, and securities, now at this stage, it's very difficult to comment on and put a date as to when this will happen. All I can say is that the first set of adopters, much like several months ago, banks were the first set of adopters. Today we have the first set of adopters, especially in insurance and securities, who have already started making moves to joining the A ecosystem. And while it may have taken X months for us to get here, really once it goes live, I think, it'll be a delta or a fraction of X for other ecosystems to join. And therefore, we do expect that when these happen, we will have robo-advisory and tailored financial products kind of available, right? So double clicking on that, Hardik, if you can proceed kindly to the next one. I think cash flow lending in particular is not just an efficiency in lending story, it is a portfolio growth story. And like I mentioned earlier, using GST data and CASA data as signals and having all of this happen through a single standards-based API-driven ecosystem, which kind of guarantees zero touch in terms of data availability and therefore very low cost of fraud, and guarantees availability of funds to the SME in real time. So no waiting and clicking elsewhere to get it. So we're beginning to see, and that's the Oken promise. We're beginning to see the first products of that come out, and I think that's very exciting. In the, let's say, next 3 to 6 months, we will actually see AA become critical in driving lending being reimagined for SMEs to begin with, but there's no reason why those rails can't be used for other innovative loan products, even in the retail side as well, right? On the PFM side, a lot of these global stories like Angaj and Hardik have been mentioning have led open banking in the West has led to a lot of innovation, particularly in the PFM area. And all of these are names of companies that we study, and we see a lot of fintechs in India, creating the India stories which are similar to these. So whether it's just providing an aggregated view, providing kind of financial education based on just that aggregated view, or encouraging micro savings, or bringing in loyalty, rewards, and advice, all of this is quite naturally. PFM has been around for decades, and I think the problem with PFM has always been the availability of reliable, high-quality data, right? And where it has failed because the data availability pipes have not stood the test of time, and the extent of data has not really expanded to just 1 or 2 types. So with 23 types of data and with reliable pipes, the time for PFM may just arrive, in India, as it has, I think, in the West already, right? And so the PFM story's roadmap is that once a strong PFM use case is built with CASA, TD, RD credit cards, as insurance securities come up, there's a roadmap for building in more. And the whole PFM story is it really deepens engagement, and most of you in the audience will know much better. Deeper engagement is the path to profitability in the financial services. So really, that really is how we see the use cases hopefully coming to the market.
Thanks, Vamsi. Quite a promising vision of the ecosystem. With this, we end the presentation. We'll move on to Q&A session now. As I explained earlier, just go to slido.com, enter the code displayed here, API, and you can enter your question. And before we move on to the Q&A session, let me just remind that while leaving the webinar, there'll be a short survey. Please take time out to answer that. With this, we can now move on to Q&A session.
Okay, we have the 2 questions here.
Thanks, Shelly. So let's start with first one. Is there any eligibility criteria to join Sahamati account aggregator ecosystem? Vamsi, would like to take the question?
Sure, yeah. So the first point to understand is that the eligibility criteria are laid down by the regulator. So what we're calling the Sahamati account aggregator ecosystem is basically a name for the alliance and for the services that we give, but we are part of the larger ecosystem, which is essentially what RBI has laid out. And the eligibility criteria as per RBI master directions is that only entities which are registered with and regulated by any of the 4 financial sector regulators in the country, that is RBI, SEBI, IRDA, PFRDA. Only if an entity is registered with and regulated by, that's the critical phrase, that RBI has laid out, can such an entity be an FIU, stroke an FIU essentially. And FIP is also carefully defined by RBI, but it's an expansive list. It includes all potential types of registered and regulated entities who manage accounts of different kinds for customers. So banks, NBFCs, RIAs, depository participants. So it's a fairly exhaustive list. So the simple way to remember this is you've got to be a registered and regulated entity. Now, once you're a registered regulated entity, you can become an FIU, FIP. To become a member of the Sahamati Alliance, essentially, you have to declare to us and prove to us that you're a registered regulated entity, and that's about it. We are there to help you onboard yourself into the ecosystem, because we believe that it's important that everybody that claims to be ready to join the ecosystem must prove to the other parties that they are indeed ready, and hence certification. There are two environments that the Sahamati account ecosystem provides. One is a UAT environment, which by definition is meant for you to test, and therefore it's a free for all. All you need to do is reach out to Sahamati, with some basic details that we will seek, and then you will get your entries in the UAT central registry, and that then enables any FIU or FIP to test with the sandboxes of the A's, right? But prior to production access, where the listing happens in the production central registry, the eligibility criteria for that is that you must be certified, right? Whether you are an FIU or an FIU and an FIP, or just an FIP or an AA, doesn't matter. You have to be certified, because that's the only technical guarantee that when you interact with other parties in the ecosystem, consumers won't be inconvenienced because of bugs and issues. Bugs may still happen, but at least we can avoid as many as possible. Let me take the second one also, Hardik, in the interest of time.
Please.
Yeah. So what all modules can the TSP certify? Essentially, I want to break this up into two parts. The question says, can the TSP certify? Which is an interesting question, because where we are today in the certification framework, where we have been today, is that only FIUs and FIPs are treated as certifiable entities. Where we are moving to very shortly, and Fime is contributing a lot in terms of defining the process along with Sahamati and with the other certifiers, is we will also expand this to include TSPs, or technology service providers, to say, hey, here's my API implementation, and this is certified, right? So assuming that happens, whether you're an FIU or a TSP, the modules that can be certified are essentially your FIU module and stroke or your FIP module, right? So it depends on what your role is. There is a reciprocity principle at play, which is that if you are any one of these entities that has any of these 23 types of data that Revit has defined, you have to be an FIP. That's the fair code of conduct that the Sahamati Alliance imposes. But if you do not have any of those types of data, but you're a registered entity, like you're an NBFC which doesn't have deposits, for example, you can certainly start as an FIU alone, get certified as an FIU alone, but sign up to a common participation terms, which again is part of the engagement that Sahamati will do, in which you agree that in principle, you agree to be an FIP as and when the implementation is clarified in terms of what data you can provide.
Thanks, Vamsi. Let's move on to the next one. It says, how is the adoption of this by FIPs? In my capacity as an FIU, are all the data points covered in the Revit documentation available to consume? Again, I think Vamsi, you'll have to help us here.
Yes, sir.
Answer this.
Yeah, happy to do so. So where we are today is, and this is really a great boon, we have HDFC, ICICI, Axis, IndusInd as already live. We are undergoing what's called a managed rollout phase. So between these four banks, as you know, we have the leaders in the private sector world. SBI is a very, very active, has been very active. In fact, the first POC 2 years ago was done by SBI, but then there were several other priorities, etc., and the ecosystem needed to take care of those in terms of all the interop and all of that stuff. They have been working on this, and we expect SBI to join the ecosystem within the next few weeks. Always tough to put a finger as to when exactly that will happen, but very actively engaged. And when that happens, you have obviously the cream of the public sector banks and other public sector banks joining. So the adoption of this is here to stay, and in fact, by the end of next month, we will have at least 2, hopefully 3 more banks, again amongst the top 10 banks of the country, being certified and joining the ecosystem. So that gives a good coverage in terms of deposit accounts being available to the rest of the folks. All the data points covered in Rebit documentation available to consume? So the Rebit documentation not only standardizes APIs, it standardizes the data schemas. And it standardizes what is mandatory versus what is optional. And what certification takes care of is precisely this. It verifies that if an FIP declares it is ready, not only is its API certified, but the data that it is providing is also certified. And therefore, where we are today, in fact, I can share this with the audience. We've had 3 weeks of managed rollout. We probably have close to the first 1,000 citizens of this country actually taking loans and getting loan offers on the basis of their CASA data being shared. And touch wood, wherever wood is, we haven't heard a single, data issue, right? We haven't heard people saying, yeah, everything is fine. I got the data, but when I opened the packet, decrypted it, I couldn't use it. In fact, what we've heard from the first set of lenders is, if we get the data, it is usable. And I would credit the certification efforts done by the certifiers and the early adopters as leading up to this.
Thanks, Vamsi. Let's move on to the next one. Does Fime certify the implementation is as per standards defined by regulator and ensure interoperability between participants? Angaj, you would like to take this one?
Yeah, sure. So yeah, definitely yes. Here, I mean, we are basically using the Revit specification and all the process defined by Sahamati to ensure the certification and to ensure the interoperability between participants. That's been the whole premises of a certifier providing the harmony and the standardization in the ecosystem. So yes, the answer is yes.
Thanks, Angaj. I think we are bang on time. So with this, I think if there are no more questions, that we wrap up the session. Thanks once again, Vamsi, Angaj, Amit, for being on the panel, taking time out. And thanks everyone for joining the session. If you have any questions at all, you can always reach out to Sahamati or Fime. We both are available on LinkedIn, various social media, as well as our website. So feel free to reach out. Thanks once again, everyone. Have a nice day. Bye-bye.
Thank you, everyone. Have a
Thanks,
nice
everyone.
day. Thanks. Bye.